Okay, so this is the Coin Brief Podcast, episode 30. I am your host, Evan Faggart, and we have Dustin O'Brien here with us. And we're just going to get straight to the news today. We've got a couple pretty interesting stories. The big part of our podcast today is going to be about GAW. Everybody loves to hate on GAW, so we're going to talk about them a little bit because a new story has come out. Allegedly, we don't know if this has actually been confirmed yet, but allegedly, GAW miners is under investigation by the SEC, and they are investigating them for a few things that has to do with the way they're handling their profits from Zenpool to what they said about the $20 price floor, all kinds of stuff. I don't. This article is pretty long. What do you know about it, Dustin?
Well, I mean, honestly, it's not a whole lot of information yet, except for what you said. I mean, basically that the SEC is investigating GAW because of the promises they've made, and also, I think part of it has to do with selling hashlets, basically, because hashlets are not. It's not that they're selling mining hardware. They're selling kind of a mining derivative almost. And when you start getting into derivatives and securities, you get into the SEC's territory. Like you said, this hasn't been confirmed. It was on CoinFire. They have supposedly a source inside of the SEC that's leaking this to them, and they don't want to say who it is because that person can get in trouble, I guess. But if this turns out to be true, then yeah, it's pretty much saying because GAW supposedly misled people, and about like you said, the $20 price floor and the way they marketed hashlets as pretty much miners, which weren't actually miners. It's plausible. I'd say that it's very possible the SEC is investigating them, especially with all the other speculation that's been surrounding GAW. I mean, people have been worried about GAW for a while now.
Yeah, I wouldn't be surprised by this at all because ever since Paycoin, not even before that, ever since GAW started doing whatever shady thing they were doing with mining. I don't know much about mining, but they did something shady with mining. But all anyone has been saying about GAW, except for the GAW fanboys and fangirls, but people outside that little circle have just been the whole time saying that GAW's a scam, GAW's a scam, they're up to something shady, they're going to do something wrong and run away with a bunch of money. So it wouldn't surprise me at all if the SEC is investigating them just to make sure, just because there's so many rumors about this company. But at the same time, I do think that I agree that they have said a lot of shady things, especially with the $20 price floor. The GAW is right that they never explicitly promised a $20 price floor, but they strongly suggested that they had the ability to maintain a floor. And then the fact that that never happened, and they deleted a bunch of posts and articles and things and redacted a bunch of information on interviews or whatnot, just makes them appear so much more shady. So I think they kind of had it coming, just being as shady as they are, for lack of a better word.
Yeah, I understand a little bit more about what happened with GAW because, I mean, I'm sure you know that I really liked GAW
Oh
early
yeah.
on because when they first started, they weren't making mining hardware, but they were reselling it for Zeus, which was a company based out of China. And Zeus made really awesome hardware, and GAW had the best prices, got it to you instantly, always in stock. I have a lot of friends that bought mining machines from them that cheaper than you can get anywhere else, and they always performed above what expectations were. I do know some people had issues with them, but I didn't. And I didn't know, no one that I knew that had interacted with them did. every company has issues sometimes, but never really anything serious. I've actually still got a box over here. I have 2 Furies that I bought from them back then. But when it got shady, as you said, was when they launched the hashlet, which is the mining derivative I was talking about, where it was, you can buy these cloud miners that, you can start at 1 mega hash through however much for script, and then they added on SHA too, where you buy 1 gigahash through however much you want of them. And it seemed they just had an infinite supply, at least based on what they were selling in terms of hashing power, and yet that hashing power wasn't showing up anywhere. No one was noticing suddenly all the script mining altcoins are having huge spikes in difficulty. No one was noticing huge additions to Bitcoin's mining outside of the norm. And that's where the speculation came that, okay, well, maybe they're not buying mining power. Maybe this is just, who knows how they're doing it, what they're doing exactly.
Yeah, I think one of the ideas, and I may be wrong, but I think one of the main idea that people had was that they were getting all this money from people buying the hashlets, and then what they were doing was they were just turning around and paying people with the revenue they just got. And it's like a pyramid scheme.
Yeah, that's the definition of a Ponzi scheme or a pyramid scheme. Yeah, see, I never really completely bought into that. I've always kind of thought that there was a little bit more to it. Maybe it was more like they did have some mining power already, and they were buying mining contracts. And I know enough about mining. I know enough miners to know that if you know what you're doing, you can make above the average and return for mining if you know how to write a script to pop between pools, or if you know how to take miners and modify them, change the power supplies, doing stuff like that. There are ways to make above the average, because I know people that are doing that right now that are making significantly above average returns on their mining equipment. So I thought maybe it was something to do with that, but then it just kept moving on. I mean, it went from hashlets to prime hashlets that had special powers. They could power up, basically.
Magic powers.
Yeah, I never really understood what that was about. I didn't really get that into it because at that point I was kind of turned off by them and I wasn't sure what they were doing. I didn't really want to speculate one way or another because I was completely confused. And I wrote actually an article after a while when they announced Hashcoin, which became Paycoin, and Hashbase, which I think became Paybase, and Hashpool, which mined hash points, which both no longer exist because hash points were converted into Paycoins later. But I wrote an article before all that happened when they first announced it, pretty much saying, well, they could be doing all these things and trying to basically build this huge infrastructure that would be amazing if they can pull it off. And well, that didn't really materialize, as I stated. But partially did with Paybase. But then when I saw the actual specs on Paycoin and really read into it and saw the connection to, Stuart Frazier of Cantor Fitzgerald, which I don't know how involved he is, but, he's at least been an investor in GAW in the past. Paycoin scares me. Really Paycoin, not as much as the idea behind Paycoin if the wrong person took it and ran with it.
Yeah, well, that's interesting because that gets into the article you wrote last week, and it was published the same day we uploaded last week's podcast, and basically what you do is you just lay out the facts about the people who are involved with Paycoin, how the Paycoin protocol actually works, and you kind of come to a conclusion saying we don't come to a conclusion, but you say this is what Paycoin might be, and it will become this if the right people get involved.
Right.
So, and basically what you said, your little phrase for it was a decentralized central bank.
Yeah. I mean, yeah, that's what it has the potential to be. It has a few flaws that kind of would make it difficult for them to pull it off with Paycoin. which is why I said I'm not as worried about Paycoin, but because GAW has a controlling share of Paycoin right now, because they have more than 2/3 of the prime controllers, which Paycoin is set up. If you have more than 2/3 of the prime controllers, you have control of the network. You can change the code. They could fix the problems, and if they fixed those problems, which I will not mention, but then it could definitely become that if the wrong. I say the wrong people, but if the right people invested in it and took it in that direction, Paycoin or something similar to Paycoin could be basically a decentralized Federal Reserve that runs on autopilot and is controllable by whoever owns the prime controllers or the equivalent of prime controllers in some other coin. And those would be basically the giant banks that we see today, except for rather than having to deal with the Federal Reserve, which mostly just does what they want anyway, but still, at least has a mind of it, has people in control of it that do have their own thoughts and opinions. It would be just those people would have complete control. They'd be able to completely dictate the rate of inflation or stop it or do whatever they wanted with it.
Yeah, just like Federal Reserve.
Yeah, except for to another level and decentralized, like with the benefits of being a somewhat decentralized currency that has the speed and low cost of transactions that like Bitcoin has, which they could sell to people. They could sell people on the low transaction costs and speed and just bank on the profit that they'll make from being able to manipulate the currency.
Right. And what's really scary, I think, about this, and pretty sure you agree too, because you're the one who gave me this idea. What's really scary about it is that it doesn't matter what the Bitcoin community or the cryptocurrency thinks of it, because if Paycoin becomes what it has the very scary potential of becoming, then the cryptocurrency community aren't even part of the marketing strategy.
No.
Because they're going to be trying to get, like you said, big bankers, big institutional investors. So us, me and you and the rest of us little people, and if they market it right to the right people, that wouldn't matter, because they're way more normal people and there are way more institutional investors and bankers than there are cryptocurrency users. So
Yeah.
it could take over and push Bitcoin out, or all cryptocurrencies out, with whether we like it or not.
Yeah, I don't know if it necessarily pushed them out because I mean they're already out. Basically, they're not part of mainstream already. It wouldn't necessarily really remove Bitcoin or anything like that. It would just make it much harder for Bitcoin or anything else like that to really take off, because a lot of the advantages that Bitcoin or other cryptocurrencies have right now would then be baked into the traditional financial system. They would have
Right.
a lot of those advantages just sitting there, and if they pack it, I mean, Bitcoin's market cap's $3 billion. That's a drop in the bucket. J.P. Morgan Chase in was it 2013 paid something like $15 billion in law like settlements and fines, and still had almost $20 billion in profit on top of that. And that's one bank. If they work together, and they do, they could pump enough money into something like that, and into marketing it and into creating a product to sell to the general population, with them backing it, saying yes, we support this, that not only would the governments go for it, but so would everyone else. And it is scary, but like I said, there are some fatal flaws, some things that would have to be fixed with it, and I hope that no one figures those out.
Well, getting back to the alleged SEC investigation, do you think, regardless of what happens, because either way this is a big blow for GAW's reputation, even if this ends up being true or not, because it reaffirms a lot of people's suspicions, And even if it ends up being false, it's still going to make people a lot more suspicious. But do you think this is going to hurt um, Paycoin's reputation? Because regardless of what the Bitcoin community thinks about it, Paycoin has actually, I don't want to say it's been successful, but it hasn't been such a huge failure as everyone predicted it to be. And it's because they have like this core group of super dedicated Garza fans, I guess you could say. Do you think it's going to turn any of these people away?
No. Um, I mean, not unless like an investigation to GAW came out with provable facts showing that they were doing something illegal. If Josh Garza were arrested or if GAW was shut down by the SEC, then yeah, okay. Unless that happens, then no, it's not going to change any of those people's minds. Some of those people have changed their minds and walked away from it recently, but most of those have already made that decision just based on Paycoin itself and Paycoin coming out and everything that happened around that. But the ones that remain, they're in it for the long haul, I think, and people are moving over to it somewhat, I believe. I don't know what actually people paid in the IPO. I know that at times it was higher than the current price of a Paycoin. But I think that the people that were invested early on that had hash points and were mining hash points supposedly, and were getting them at a rate that equaled like I think 100 hash points was a Paycoin or something like that, and they were getting enough hash points so that with Paycoin valued at like $3 is what they were valuing it at, that it would be the same as if they were mining Bitcoin. At least that's how I understand it. Like I said, the GAW stuff's really confusing. There's a whole lot of information, and some of it contradicts itself. But those people have actually made a lot of money, because even at $2.50, with the 350% yearly inflation, like that the prime controllers the GAW has are staking at, with their customers' funds in those wallets and paying out to their customers and growing at that rate, which is almost 1% a day, they are profiting. Even if the price even stays somewhat stable, they're making money.
Yeah, Paycoin is definitely going to be interesting to watch. No matter what happens, it could be a huge flop, and we'll all be laughing about this time next year, or it could end up being something really scary. Oh, a big reason would be due to that core group of followers that they have, and like you said, they're in it for the long haul, and no kind of SEC case or any kind of anything is gonna deter them unless something like you said, unless something comes out where it's confirmed that they're ripping everybody off and they're gonna lose money no matter what. Then they'll get out.
Right.
But anyways, given all this controversy surrounding GAW, our next topic is going to be pretty interesting. I think it's pretty funny actually, um, because of all this controversy surrounding GAW. It created a huge controversy with the North American Bitcoin conference in Miami, which just wrapped up. It was over the weekend from like the 16th to 18th, I think, and Paybase, which is the exchange that GAW Miners owns, they were like a huge sponsor of Bitcoin Miami, and Garza was scheduled to do multiple or several, like two or three maybe, speaking events. He was going to be one of the main speakers, and he was on
Panels.
he was on a few panels, and everybody was up in arms about this. On Reddit, there are people wanting to boycott, trying to get people to boycott the conference, trying to get him banned from speaking there, just saying bad things about the conference and everybody associated with it because they're allowing someone that they believe to be a scammer to speak. And but Josh Garza responded to it, and he's like, Bitcoin Miami and me personally, we care about the public's opinion. We want to clear up any misconceptions you may have. So after my main speaking event, I'm going to be hosting a Q&A session where you can ask me anything you want. Well, then people got all excited about that because they were just going to completely destroy him with their questions. Then the conference came, and to my knowledge, Garza didn't speak at all. He backed out of all of his speaking obligations. And, of course, people were ridiculing him on Reddit for that. I personally think that's pretty funny.
Yeah, yes and no. I wish he would have spoken. I would have liked to see, a recording of it. And I mean, from what I heard, he also had bodyguards with him, which, people were ridiculing that, but that's completely understandable at the moment. There is a lot of hatred towards that
Oh
guy.
yeah, definitely. But
I
no,
mean,
I saw pictures. Somebody posted a picture on Reddit. He had two huge guys, uh,
I
standing
would
next
too
to
if I was him.
him.
I mean, with the amount of people, with what people think about him, I would too. I mean, he was probably. I mean, I would say there was legitimate danger to him being there, but at the same time, I do wish he would have spoken. And I did want to go back to something you said about Paycoin at the end just now. Like, we might look back in a year and laugh. I think no matter how Paycoin goes, good or bad, we will not look back in a year and laugh because either a lot of people here are going to lose money or it's going to be something nasty for everyone else. Like, it's going to be bad either way, in my opinion. Um, I don't necessarily. I'm not going to judge GAW themselves because there's not enough proof on either side of what's going on in there. But the cryptocurrency Paycoin, I will judge, and I will say that if successful, it will be horrible, and if it fails, it will be horrible because if it fails, it'll hurt a lot of people, and if it succeeds, then it's dangerous. So, yeah. But yeah, about the conference. I wish he would have spoken because I've spoken to Josh before. I've spoken to him a few times on the phone now. I've interviewed him. I've asked him questions, and he's an interesting guy to talk to. He knows how to speak, and it would have been nice to see him do a Q&A and see how he handled that. I was really excited to see it, but sadly he didn't do it.
Yeah, I definitely don't think it helped him any.
No.
Because people were just so up in arms about him speaking, and they wanted to hear what he had to say. They wanted him to defend himself, except for those people who, well, they changed their minds. I think a lot of them did. But initially, there were a lot of people who wanted to ban him. But the fact that he faced all this criticism and ridicule and said, "I'm going to give you what you want, and I'll answer any question you want," I I think that would have been a good opportunity for him to make his case and maybe even improve his reputation a little bit. But the fact that he showed up with bodyguards, he partied because I saw pictures of him at the after party of the first night and he was taking pictures with people. Uh, he showed up and had a good time, but then for whatever reason, I don't know why he didn't do it. There could have been a really good legitimate reason, but to my knowledge, he didn't say why. He just dropped out of his speaking obligations, and I think that hurt him even worse than actually being scheduled to speak at the conference.
Right. I don't know why he didn't. I mean, honestly, that is something that makes me somewhat think that. Well, I mean, I don't necessarily distrust CoinFire, but there hasn't been any proof of the allegations they've made, and I try not to make a decision in one way or another until I see proof. I don't trust GAW anything they say, nor do I trust CoinFire anything they say until either side provides proof of anything.
Right, which is what all reason we should do.
Exactly. But the fact that he didn't speak there, didn't do the Q&A, and also some of the actual whole sections of hash talk forums that seem have been removed makes me wonder if there is not something going on, maybe some sort of investigation, or they're trying to clean things up or try to make it. Maybe he was afraid of saying the wrong thing. I don't know. But that's just speculation. That's the only explanation I can see of why he wouldn't do it, unless maybe he got violently ill. Who knows?
Well, I don't know about that. He was having a good time at the parties and stuff.
That could be the reason he got.
Yeah, that's a good point. Maybe he was afraid of saying something he wasn't supposed to if he does have this investigation going on. That's a good point that I didn't think about.
Yeah. Um, yeah, I mean, or even without the investigation, I mean, he could have lawyers telling him, yes, no, not a good idea to speak right now. There's too much on you. There's too much criticism of you. You should probably just keep a low profile. And I don't think he's very good at low profile.
Yeah, if that was the case, and I had like legal counsel or something tell me not to speak, I'd I would probably and I decide to listen to them and not speak, I probably wouldn't show up to the conference and party and not speak without
Well,
without giving a legitimate reason for not speaking, at least.
well, you're not Judge Garza.
Yeah, that's true too.
Yeah, like I
But
said, I've spoken to the guy, and he's something else. I'll have to say, no matter what happens with GAW, if they turn out to be horrible and a scam, or if they turn out to be legit, or if anything that's said about them is true, it doesn't matter. I've enjoyed speaking to him. He's a fun guy to talk to. He would be a fun guy to party with, I'm sure.
well, anyways, I guess it's time to move on from GAW and get to some Bitcoin news. The
Yeah.
actually pretty big news that just happened today. Um, Coinbase completed another round of venture capital funding, and they raised $75 million, which I think is higher than their last round, and it's actually some kind of record
Yeah,
uh, breaking thing for them. But what's even more interesting to me are the people and the firms that actually invested in them during this round. We have a bunch of people. We have um, Draper, Fisher, Jurvetson, which isn't surprising because Draper is Tim Draper, who is a big Bitcoin advocate, and he won the first Silk Road auction. But then we have Union Square Ventures, Ribbit Capital, and Andreessen Horowitz, who are Bitcoin friendly. But then we have a former Citigroup CEO, Vikram Pandit. I think that's how you say it. And then Tom Glocher of the CEO of Reuters. Those are two really big people. And then we have the New York Stock Exchange, um, USAA. I don't know what that stands for, but they're a Fortune 500 financial services group. And BBVA, again, I don't know what that stands for, but it's a giant bank in Spain. And then a big telecom company, Docomo. It's a Japanese company. Um, those are some pretty big names investing in Coinbase, which is essentially investing in Bitcoin.
yeah. Um, yeah, it was really surprising, in my opinion. Like, I didn't expect to see the banks putting in it. And the record you were talking about they were breaking, I mean, that's the most anyone's invested in a digital currency company or a digital currency anything ever at one time. Like, before that, I think the most invested was. It's kind of hard to say. I can't remember exactly which one it was because it all depends on the price of Bitcoin at the time. Maybe Ethereum, maybe MadeSafe coin, maybe one of Coinbase or BitPay's earlier rounds of investment, or side chains. I don't remember which one.
I think,
There were a whole bunch that were pretty high.
yeah, I think
Um,
Gems was, I think Gems beat out Ethereum, maybe, I don't know.
yeah, but I mean, it doesn't really matter. The point is that this one was
Yeah, Coinbase
significant.
just blew them all out of the water.
Yeah, more than doubled the previous record, and had some huge investors, very important investors, because having backing from people that were CEOs of banks and from part of the New York Stock Exchange, like investment firms and European investment firms, and just everything is going to open doors for them, basically. That gives them connections. Not that they didn't have connections before, but they
Well,
definitely will now.
that leads me into what I was going to ask you. What do you think this means for Bitcoin?
Well, it's hard to say. I mean, there's it's kind of like right now we're in a period where there's a whole lot of controversy going on, and it's not just the GAW stuff, but after Bitstamp being hacked and all the other random craziness that is going on. Not that there's really been a period in Bitcoin's history where there's not a lot of random craziness going on. But with all of that happening on one side, but then on the other side having Coinbase having this huge investment, valuing and their company being valued at $400 million, which is more than 10% of the total market cap of Bitcoin itself. And which one of those two has to be wrong. Either their valuation is too high or Bitcoin's market cap is way too low. And I'm going to say probably Bitcoin's valuation is way too low.
Where do you think it should be valued at?
I'm not going to speculate on it. I mean,
the moon.
Yeah, the moon. I mean, real long term, yeah. It doesn't have the infrastructure for that yet, but I think this market correction that's happened recently has went a little bit too far down, and it's going to be corrected back up soon. No one invest, on my opinion, by the way. I'm not.
Well, I
I'm
mean,
not giving an actual stock investment advice here, but I do believe that's probably going to happen.
Since we're speculating right now, I think we're actually right where we're supposed to be, and this is where I expected us to be, because I think I talked about this maybe a couple weeks ago, but basically my theory on the whole thing is that the entire freaking year we've been in a big correction from Mt. Gox.
Yes.
I think the Willie Marcus bots are fraudulent. I think they pumped up the price without having real demand backing it up. And I think the entire year of 2014 has been a correction, an adjustment of the Bitcoin price to a real level of demand. And
Right.
At the very beginning, at the very opening of 2015, we went into free fall. We went down to like 155, I think is the lowest we went. And now we leveled out around 210. We're fluctuating between like 210 and 213, 215 right now.
Right.
And oddly enough, before the giant jump to 1,000 happened, Bitcoin was trading between $100 and $200. So I think the November price peak is just a giant artificial bubble, and we should treat it as an anomaly. And so adjusting for that, the price falling down to 200 and leveling out for the time being. It could go lower. Again, who knows? It's Bitcoin, but going down to 200, it's right where I personally expected it to be after kind of coming up with my grand speculative theory about Mt. Gox.
Right. I do agree. This is about where it should be. I think it may go up because of the Coinbase thing. Because one thing that happens because of the Coinbase investment, I think, is that it gives kind of Bitcoin legitimacy. Having people in those positions invest that, like that amount, people that have been CEOs of banks, large firms like that, not just firms that have been pro Bitcoin for a long time, but new ones coming in and ones that have been on the outside this entire time. It gives more legitimacy to Bitcoin, so we may see new people come in and we may see more speculation, which could drive up the price. And then there's also the what was it on Bitfinex? I had it pulled up earlier. I wanted to see what the actual number was. People have basically been trading on the margins and shorting Bitcoin, from what I understand. And right now, it's something like 28,000 Bitcoins outstanding at the moment from that. And if the price rises much more and those people hit their margin calls, or they just say, okay, well, the price is going to go up now, I better start buying, and start buying back those Bitcoins that they basically borrowed to sell earlier, that's going to cause a huge spike up. I'm just trying to find my chart too, 'cause if you draw a line from the beginning of 2013 basically and follow like the bottoms of all the charts and keep extending it out and ignore the big peak in November and just keep going under it in a straight line, you will come up to right where we are now at 200. And so,
You still looking for that chart?
yeah, but I forget about it. I'll find it later.
Okay. Well, and another thing about the Coinbase big funding round is that they're going to use a lot of the money to go into emerging markets, and the CoinDesk talked to um, Brian Armstrong, the CEO of Coinbase, um, and he talked about expanding Coinbase into other countries, and he didn't mention any country specifically. He said something about India, but he didn't say anything specifically about which countries they were going to go into, which maybe they haven't made a decision yet. But he did say that they were going to be aiming at emerging markets and unbanked people. And as long as I've been into Bitcoin for like a year now, and the whole time I've been here, people have been saying that Bitcoin's potential is in the emerging markets with the underbanked. So I think that could be. I think that's full of potential right there.
Right. Yeah, I completely agree. That is really where Bitcoin is most beneficial. That is who it will be most beneficial to. And the price, whether it jumps back up or it goes down, it doesn't even matter. And none of it matters. I mean, that's all speculation. That's all people trading, trying to make money right now. But really, what really matters is, you know, the spread of Bitcoin, the usefulness of Bitcoin, and it's useful now. It's useful to me. It's useful to people in the United States. It's useful to people in Europe and China. But it will be very, very useful to people, like you said, the underbanked, the ones that right now, if they want to send money to family in another country, are paying 30% remittance fees, or don't have a bank to store their funds in. If they can store their money on their phone and have a wallet that is, say, backed up in a way that even if that phone was lost, they would still have their money, which that is very possible. Then that's awesome for them. That's great. Then they can join the global economy, basically. They're currently excluded from the global economy. They cannot participate in the global economy because they don't have a bank. And even if they have a bank, the fees are going to be too expensive for them to make any money starting a business or trading. But Bitcoin does away with that. Bitcoin changes that completely. We actually have an article about that, about Africa and the growing Bitcoin businesses there, from Michael Kamani, who lives in Africa and is involved with a lot of groups that are pushing digital currency in Africa, trying to get support for it, and businesses have been just completely built around it already.
Yeah, I think that adoption is gonna move faster in emerging markets than in developed markets, like most of Europe and the United States. Mostly because here in the developed world we have credit cards and debit cards and stuff, and while Bitcoin is infinitely better than that, right now it doesn't seem like it because the consumers don't pay the credit card cost of 3% per transaction thing, and we're used to all the banking fees. That's just a fact of life for everybody, and so it's kind of like, to use the incredibly worn out analogy, it's like the early days of the internet. There's nobody really has found a reason to go full blown into Bitcoin yet. Just like it took time with the internet. But in emerging markets, Bitcoin is more than just some novel alternative to a credit card. It's access to the global economy. It's a path to prosperity that wouldn't be there otherwise. It could change lives immediately in emerging markets.
Yeah, definitely can. I mean, suddenly, some random artisan or in Africa that currently is limited to really just selling stuff locally has the ability to accept payments from anyone around the world, and as long as they have the ability to ship that whatever they have, have that around them, can send what they've created to anyone. They could already send it now. Most of the time. I mean, most countries in Africa can. They just might not have the banking capacity, or if they have the banking capacity, it's going to be too expensive in terms of fees for them to do it. Same thing for services. There are a lot of talented workers in Africa that could do things, perform services on the internet, just like, writing articles, programming, whatever. But right now, it's difficult for them to be paid effectively, or to get paid and actually be able to keep enough of the money they're being paid for it to be worth it. And I actually know some people that are doing exactly that. People that are in countries that have very low wages, but they are they are doing very well for themselves because they are using Bitcoin and working in the global market, and they're getting paid wages that are more standard for first world countries while they're living in a third world country.
Right. A lot of the writers for Bitcoin websites are people in South America. A lot of them are. I know several from Argentina, and they'll work for, like, the standard rate for like a 1,000-word article for a Bitcoin news site is $20. But they'll do it for $15, and then the website will just hire an American editor to fix the English up, and everybody wins. They're making a bunch of money because the Argentine peso, or whatever their currency is called, is super weak, and they're getting paid in Bitcoin. And then the news websites are getting a good deal because they don't have to pay the standard $20 for American writers, and it's crazy how global the Bitcoin economy is.
Yeah. One of our new writers, Tyrone Johnson, he made a claim, and I've been meaning to talk to him about it because I want to see his source for it. I couldn't find the source, and I want to see where he's pulling this from. But the only reason I just let it through and didn't take it out is because it completely makes sense, and it's most likely true that Bitcoin is the currency that is accepted in more countries than any other currency, and that's probably true because
if we're not counting the dollar.
No, even in counting the dollar, because the dollar is not necessarily, or is used, I should say, maybe not accepted, but is used.
I mean, because a country has to have dollars if they want oil, and every country.
Right. I'm talking about more on the day-to-day business level. Like, most people in those countries, they're going to be using their national currency.
Yeah, right.
You're not going to see people using different currencies, but Bitcoin seems to have basically gotten into every country in the world at this point, at least in some form or fashion. I know a Bitcoin transaction was sent from North Korea a while back.
Really?
So, yeah.
Well, that's a brave soul.
Yeah. So, if it's made in North Korea, it should have made it just about anywhere.
Yeah, with Coinbase expanding into the emerging markets, I think that adoption is only going to grow faster, which is really important because a lot of people complain about how speculators contribute so greatly to price volatility, and the people try to come up with all kinds of schemes with manipulating supply and stuff, making like flexible supply, stable coins is what they're called, to fix the problem. But really all that is needed is higher demand. People just need to have a reason to use it more, and the more unbanked people in emerging markets that use it, the more that Bitcoin network effect is going to grow, and speculators will just have less and less of an impact on the price, and it's good for everybody.
Right. Yeah, all the people that want to put restrictions or change, basically the structure of Bitcoin, say we'll make stable coins, like you were saying, to try to fix this problem, really just impatient.
Yeah.
It's just, you just have to wait on the market. The market has to grow. Focus on growing the market. Focus on growing acceptance, and that'll come later. The price is not important.
Yeah, like
Yes. Now at least it's not.
I read an article the other day, and it was called, I can't remember exactly what it was called, but it was something along the lines of, uh, what is it gonna take for Bitcoin to go mainstream? And the article was just speculating on all these changes and like marketing schemes and things that we could and should do to make the price higher and get more people on board. And I was the whole time I was reading, I was like, the only thing Bitcoin needs to become mainstream is time.
Yeah.
It's this is Bitcoin's sixth year, and if people the people who think that Bitcoin should be on top of the world right now in 6 years, that's just ridiculous. Um, it's taken the dollar 100 years to lose 100% of its value. Uh,
1800% of its value
1800. Where does that number come from?
from the consumer price index. If you compound it, it's gone down.
Okay, well,
It's worth one
all the
eighteenth
numbers
of what it was.
all the numbers I see are like 97%, but I don't know. That's not important. Um, but I mean, nothing happens in 6 years. It's just people who live on internet time. They think that Bitcoin is 100 years old already. But I don't know. I think we've talked about this long enough. So let's move on to our last topic, which is for some people it's a super serious issue, and I think for most people it's just kind of like a really esoteric, um, out there thing that they've never really thought about. But it did. It was the subject of a considerable amount of debate a couple months ago. But I'm talking about the Bitcoin block size limit. Right now it's at 1 megabyte, and we're approaching that very quickly. Um, Gavin Andresen wants to raise it. He wants to do a hard fork and raise it to whatever. He wants to double it every year, every 2 years, something like
Every
that.
2 years.
Every year,
Every 2 years.
every two
I,
years.
I
Yeah.
think it started at. I think, if I understand correctly, though it could have been just the recent experiment. This isn't actually part of it, but I think he wants to push it up to 20 megabytes and then double it every 2 years.
Okay.
Um, it, but he maybe just wants to start out doubling it, and he was just doing the test with 20 megs. I don't know.
Okay. Yeah. Well, his initial blog post from like I think it was in October. He said he just wanted to double it every year, every 2 years, because that would go along with Metcalfe's law applied to bandwidth. Bandwidth doubles every year, 2 years, whatever it is. But there's some debate on that, mainly economic debate. I got in on it. Um, and a few weeks ago, like 2 weeks ago maybe, he started like playing around with it, like testing out some little implementations or something, um, just seeing what he could do. And now he's posted another thing on his personal blog. He did a test with a 20 megabyte block size limit, and it worked. Yeah, it was successful. And you said that the big one of the big things was that it actually confirmed transactions faster than the
Well,
current limit.
he wasn't actually clear about how it was faster. I'll just read what he said. I did have a surprise syncing a 20 megabit or megabyte chain to a VPS, so virtual private server. Bigger blocks were 4 times faster than the small main chain blocks. I don't know why. It is possible though that something else was happening on the VPS machine to affect the results, or maybe disk input-output is better with larger blocks. So I think it's the syncing of the wallet basically is faster, like 4 times faster to sync up, to catch up basically starting from nothing with 20 megabyte blocks. And I did just find also the proposed change is to start out at 16.7 megs and then double every 2 years.
Okay. So it's not that transactions were confirmed faster, but it's that Bitcoin wallet syncs faster.
Right, yeah, that's the point. Like
Okay.
it would make it so that right now people complain because, with good reason. I don't know if
Yeah.
you've recently tried to open up Qt on a fresh install and sync up to the blockchain, but The last time I did it, it took more than a day. Um, and so,
Yeah,
yeah,
I haven't done that since I first started using Bitcoin, since I first got my Bitcoin wallet. But I use Armory, which syncs with the entire blockchain. And the first time I did that, it took like 2 days. And now, I don't boot my wallet uh, every day. At this point, I do it like once a week, and so every time I boot up my wallet, it takes like an hour or 2 hours.
right,
It it's just so frustrating because all I want to do is just like check my balance in my wallet, or like cash a little bit out, send some to Coinbase and cash a little bit out, and I just have to wait like an hour every single time.
right,
Um, but this, anyways, it's his experiment was really successful. Uh, he's To him, this is just strengthening his argument for increasing the limit. But he also addresses some people who disagree with him on economic grounds. And basically, the main argument for that is once all the coins are mined, the only economic incentive for miners to run their rigs and confirm transactions and create new blocks are the transaction fees. And people believe that if you raise the block size limit, you increase the supply, which will make prices go down. Supply and demand, basic econ 101. Um, and then miners, it'll just be a race to the bottom, is what I saw one person describe it as. And miners will become unprofitable, and they'll shut off their rigs, and the network will get smaller and less secure. So they want to keep the 1 megabyte limit in place to keep supply scarce. So as demand for transaction grows, along with the use of Bitcoin in general, miner fees grow, and then there's this huge incentive to confirm transactions because miners can get rich off of doing so.
right. Which is completely insane because Bitcoin currently, the theoretical cap is, 7 transactions per second. And 7 transactions per second, is that when Bitcoin started or early on, that wasn't bad. That's pretty quick. That was more than, we're not even touching that right now. I mean, that's not a problem at the moment. And so, first of all, any argument towards that is missing the fact that this is not stopping. This is not a problem at the moment. So there is no race to the bottom. There is no one fighting to like try to get their transaction confirmed because we're not hitting 7 transactions per second. But we're at less than that. There's plenty of room at the moment. This is for the moving forward where we will soon hit that 7 transaction per second threshold. In which case, yeah, sure, people could pay more to get confirmed while other people had to wait. But that makes Bitcoin completely just not viable as a payment system. Because, I mean, like, Paycoin does hundreds of transactions per second. Bitcoin or Visa averages at like 40-something thousand transactions per second. Bitcoin cannot be at 7 transactions per second hard capped and survive. It just won't work. It's insane.
Yeah, I definitely think that the people who want to keep the 1 meg limit in place are misguided in their economic arguments. Um, basically, the main thing is that people believe that with a really big block size, miners will just compete with each other. The main thing is preserving network security, and they are right about this. If there was no limit, and miners would have to compete with each other to get transactions, to confirm transactions so they could get their fees. So you would have miners undercutting each other, which is what happens in competition, accepting lower and lower fees. And people think that doing this will make Bitcoin unprofitable because they'll just go so low to undercut all the competition, and it'll lead to miners shutting off their rigs and the network collapsing, which will make difficulty retarget, the network gets smaller because the miners who take over after that are weaker, and it just compromises security. Well, I have two things to say about that. One, the miners aren't going to undercut each other to the point where they are operating at a loss. Um, and if you say that really huge miners can do that and they will do that, um, then you're just using flawed monopoly theory, which I'm not going to get into here because that's a whole nother topic. Um, they will bid the price down because that's what happens. That's economics. But that's also will not stay constant forever. The economy is constantly changing. Demand is rising and falling, so that it won't be a constant decline to zero. There will always be profit to be made as long as there's demand for Bitcoin. And two, the raising the block size limit does not necessarily increase the supply because miners get to choose the size of the blocks they create. And if the block size limit is raised to a point where supply exceeds demand, then the miners can just make smaller blocks, and then their fees will not change at all, and people will still pay them. I think it's a pretty simple argument.
Not. And to clarify for people, when you say supply, you mean supply in terms of the block size and transactions.
Yep, the block size.
Not supply of Bitcoins themselves.
Yeah, I'm talking about the block size because right now supply is very scarce. There's only 1 megabyte worth of supply per block, and
right.
Yeah. So I don't think it's necessarily going to make fees lower because miners do have control over the size of the blocks they produce. But if it does, it's not a big deal. That's just economics. That's what happens. Prices for everything drop as production techniques improve and all these kinds of things. And miners are rational actors. They're not going to operate at a loss forever. They're going to maintain their profit.
Right, and there will be big firms that always, of course, will do better than the average person. But then there are also people that figure out ways to do better than those large groups. I mean, like I said before, I personally know people who have modified their own ASICs basically, and have written scripts to switch between pools in a way that they're making above the average return in terms of Bitcoin for their hashing rate and their power consumption, all that. So even though Ghash had to shut down operations recently because they weren't making profit, this person was still making profit, and that's an individual. I mean, right. It's not always going to be just the big guys. I mean, when companies like that get to a certain size, they lose a lot of their efficiency. They lose their ability to micromanage the small aspects of every machine, basically. Like, they're not going to be able to get every bit of efficiency out of every machine they have. They're not going to be able to spend the time doing that and still remain profitable. So there will be that competition. And even now, with the current block size, a lot of people are already basically just priced out of mining simply because electricity costs too high where they live. It doesn't matter what you do, that's going to happen. And this opens up the door for new kinds of transactions too, which can increase the amount miners make. Currently, a lot of ideas people have had about using the blockchain for things like messaging, which someone's actually doing now, but was originally proposed, I think, in 2011. It was put on hold or just completely discontinued because it would cause blockchain bloat. Not because people weren't willing to pay the transaction fees to send those messages, but the developer just decided, okay, I'm not doing that because that'll bloat the blockchain, and I don't want to do that. I don't want to cause a problem with it, and I don't want to try to I don't want to lock it up, basically, make it hit that transaction limit because if my service becomes popular or something. If you start to uncap that transaction rate, that block size, and let that happen, people will find other ways to use the blockchain that can increase the revenue miners make.
Yeah, and one thing that I forgot to address was that these economic arguments against it are made for the sake of preserving security of the network to keep miners from becoming centralized. Because if there is a bigger block size and miners do compete with each other and drive down transaction fees, then there will be really big mining firms, and which economically there's nothing wrong with that, but in the context of Bitcoin, the focus is on decentralization. So the mining network needs to be as distributed as humanly possible to, or as technologically possible, I should say, to maintain the security of the network, to keep one person or group from getting too much control. So that mining firms would get bigger under competition like that, but that problem can't be solved with block size limits, because mining is getting centralized right now with the limit, because it's just more cost effective to do so right now, because you can share hashing power and things like that. So there's nothing you can do with the block size limit to protect the security of the network. That's a problem all on its own, and it needs a separate fix. So you can keep the limit in place, or you can get rid of the limit entirely, but mining centralization will still be a problem, because that has to do with the cost of mining electricity. It has nothing to do with transaction fees.
Right. Yeah. And what's the solution to that?
Yeah, who knows?
Yeah. I mean, we discussed it a little bit earlier. I mean, there are lots of proposed ideas for that. I mean, there's the idea of completely just changing the proof method of Bitcoin. It could go to a hybrid, proof of work, proof of stake, or just proof of stake, or it could try something crazy like Myriad did, where you have 5 separate mining algorithms running concurrently, all competing like for the same blocks, basically, which is a really cool idea in my opinion. I like what Myriad did with that. That was really innovative. And so they basically had like a script mining algorithm and a SHA mining algorithm. They had their own independent difficulties, but competing for the same block with the same block time. And then they had 3 other ones that don't even have ASICs. I think one of them was a CPU only mining algorithm that also are competing with the same target time for the same blocks. So it basically makes it so that it's really just not even cost effective to try to build a huge. I mean, you couldn't build a huge mining operation and try to like fill it up with ASICs. Then you push the difficulty up on the ASIC-based chains, and the GPU and CPU chains are still at low difficulty, and people are matching you at home. And yeah, I don't know. I always thought that was a cool idea.
Yeah, there's all kinds of crazy fixes that could be made, and who knows what the right one is going to be for security. I'm not smart enough, not even close to being smart enough to come up with a good idea to fix security. But the main point is that it can't be fixed with the block size limit, because it's an entirely different problem that has to do with electricity costs. And so basically, my opinion on raising the block size limit is that it doesn't matter if it's raised or not. Miners are going to be profitable. There will be profitable transaction fees. So what we should be focusing on with the block size limit is not the profitability of the miners, because that's going to happen no matter what, as long as Bitcoin is valuable. So the main focus of raising or not raising the block size limit should be the scalability of the network. And if we want Bitcoin to be a global currency, I think we need to be able to process as many transactions as possible, and also raising the limit gradually to prevent spam on the network, which is why the limit was imposed in the first place, to prevent um, spam blocks, really giant blocks full of just spam maliciously created to slow down the network. Those are the main things that need to be focused on with um, increasing the block size, and I think Gavin is right on this. It needs to be increased gradually to make the network more scalable and to protect against spam. The economic arguments are just totally irrelevant because there's no chance of mining fees going to an unprofitable level um, because of the block size limit.
No, I mean, someone put it this way earlier. Basically, like if say Bitcoin, if Bitcoin were to reach, Visa's transactions per second, which I think is 47,000 transactions per second. So that's 47,000 transactions per second, and then you figure out a block is 10 minutes, so times 60 times 10, you come up with 1, 2, 3, 0.28 bitcoins or so per block from transaction fees if each transaction fee was 1 satoshi. Like you still get 0.28 bitcoins per block from a 1 satoshi block transaction fee. Well, if we had, I think if there are 47,000 transactions per second, 0.28 bitcoins would probably be a significant amount of money.
Yeah, I was gonna say that's a pretty big chunk of money, especially if
Yeah,
Bitcoin
was Visa size.
goes to the moon, like people say,
Yeah.
$10,000 by the end of 2015.
Yeah, I mean, if it was big enough to replace the Visa network,
Yeah.
then it would basically need to be. I don't know what the cost of 1 Bitcoin would be at that point. But like I said, 1 Satoshi transaction fees would still end up being over a quarter of a Bitcoin. And they would basically have to be that low to be competitive, most likely.
Yeah, so raising the block size limit, it's not as a big deal. It's not as big of a deal as a lot of people make it out to be. Um, Network security, like we said, that's an entirely different problem that has an entirely different fix that right now nobody knows what it is. But
Yeah. A lot of ideas.
yeah, lots of cool, crazy ideas. But we'll see what happens.
Yeah.
But that's all we have to talk about tonight. So that's gonna wrap up our show. Hope you guys enjoyed it. If you did, make sure to leave a thumbs up and comment. Leave us suggestions for things we could do better. Tell us what you want us to talk about next week. Um, and follow us on Twitter at CoinBrief. You can follow me at Evan Faggart. Um, there'll be links to all the articles we cited below in the description. And yeah, that pretty much does it. Hope you guys
Yeah.
enjoyed it, and we'll see you next week.
See you guys later.